This is episode 1147.
Cristina, what am I doing? What are you doing? You're the CFO. You're part of the team. You don't have to challenge on what might go wrong right away. That's very important. But if anything, you need to help the team figure out how they're going to get there, how they're going to achieve the numbers. It was some might say a very slight shift, but for me, it was this physical sort of change in how I was looking at all of this data, all of these numbers that were right up there in front of me. And that's when I realized, Jack, I am no longer sitting outside scoring the story of Octaura. I am inside helping build this company, helping build the story and to write the story from the inside.
Every now and then, a CFO joins us who represents a wider shift happening across finance. A leader built not through the traditional controller path, but through years spent at the intersection of technology, risk, and market transformation. That's why today's conversation caught our attention. Cristina Kim steps into the CFO role at Octaura at a moment when fixed income markets are being rewired in real time. And what struck us most is the timing of when she chose to reframe her own role from evaluating companies to helping build one. If you've ever wondered what that pivot feels like from the inside, stay with us. Hello, CFO Cristina Kim is with us. Cristina spent 22 years at JPMorgan, rising to managing director and leading across finance, risk, and strategic transformation inside one of the world's most sophisticated capital markets organization. Her career spans periods of both profound structural change in credit markets, giving her a front row seat to how technology reshapes trading, data, and decision-making. Today, she brings that experience to Octaura, where she serves as CFO for a company modernizing the trading of syndicated loans and structured credit. Cristina, welcome.
Thank you so much, Jack. I am so happy to be part of this podcast, so thank you for having me.
So that is a big number, 22 years at JPMorgan. That's a number, frankly, we don't always see too often. As you step into the CFO role, as you look over that span of time there, which experiences for you, Cristina, feel most foundational to the way you're going to be approaching this new chapter?
Great question, Jack. I feel like these 22 years really have given me a great training ground for something that I didn't even think I was going to do, which was become a CFO. But looking back, being part of a strategic investments team, and by the way, I was in strategic investments for about 17 years, and prior to that, I was doing investment banking. But Jack, being at the center of technology, innovation, being the translator between the business needs, finding opportunities to invest in, and figuring out the balance between risk and also upside potential and gain and benefits. I feel like all of that really gave me a great perspective of being able to come to this seat, to be able to take a bigger sort of strategic view of what the company is doing, being able to converse fluently with investors, because that's where I'm coming from, and being able to decipher that language to the management team and vice versa, explaining what it is that we're trying to do. I feel like unknowingly, I've been fortunate enough to really gain a lot of this experience to be able to do something that honestly I've never done before. I'm a first-time CFO. 1 month in, and I'm sitting here telling you about being a CFO.
People are waiting to learn.
And there's definitely so much to learn, Jack. So forgive me, I may not have answers to everything.
Yeah. You said something interesting, though. You tipped your hand a little bit. You never thought you wanted to become a CFO for quite a period of years, I would imagine. And when did was it something in the last 3 years that really took center, that became mindful of, or did it happen earlier? Is it something you've been thinking about for a while?
No, to be honest, I would say it's something that in the last couple of years really became more clear to me. And I think it's twofold. I think it's the fact that I believe that the CFO role has really evolved a lot. I think that in the past, it was more common to see a linear path to becoming a CFO, accountant, CPA, obviously, FP&A, controller. And so I never had that. So I never thought, oh, this is going to be my next step. But I think that being in the investing role and working so closely with management teams and CFOs themselves, I really started to understand what it meant to be inside a company, or at least I saw it from the outside. And it was this desire that sort of built up where I wanted to be part of that. I wanted to be able to not just be an investor, but actually help the management teams and help companies grow. And so I have to say that it really became much more apparent in the later years of my career at JPMorgan.
I would imagine recruiters had knocked before, or a CFO had approached you before, maybe looking for a successor. I don't know, but you might have said no, not at this time. Is that accurate, or what would you share with us?
That's accurate, Jack. I think it has happened. I think that you are in the center of a lot of these conversations around innovation transformation. As an investor, you're out there making, becoming familiar with a lot of these companies and investing. So naturally, recruiters do think about you in that sense, or thought about me. I think that I wasn't ready myself personally. I think that it took me, as I said, it took me a little bit to understand that I didn't need this linear path to CFO, but more of a learning path to become a CFO. And I think that with that, also coincidentally, I became involved with Octaura as an investor. And so I was part of the investing team at JPMorgan. And so I worked with the management team, and it really was about finding the right company, the right people. And that was with Octaura.
Would love to know, and we'll ask you about Octaura just in a second, but would love to know how you spent this last 4 weeks, whether there were areas of the business you knew, I got to get in front of some customers, I've got to better understand these economics or the market position, whatever it might have been. Where did you really want to, what's the seat you wanted to be in? Who are you sitting across?
Jack, the conversation from the beginning with Brian Vigili, who's the CEO here, was what strategic value adds can I bring right away to the table? And so from our discussions prior to me joining, I knew that a big part was to start thinking about the next 3 to 5 years, to think about the current cap table. How does that evolve? To think about the investor relations part. How do we formalize that? How do I bring, again, my experiences as an investor to communicate effectively and efficiently with the investor base? So all of that to me was something that I knew I was coming to do, and I was ready to obviously look into that. I think that the area where maybe I wasn't so prepared for until I came to the seat was all the machinery behind the finance function, which is, I think, for a lot of the companies as a startup, you don't immediately implement a lot of the technology, a lot of the AI. And I know that's something that you always like to discuss with the CFOs that come to this podcast. And that's an area that it really took me a little bit to understand how we do things here internally, and to start thinking about what can we do to make that more efficient, to make that better? And how do we try to incorporate a lot of the new technology, a lot of AI and machine learning in parallel so that we can actually take 2 or 3 steps forward and be able to advance and evolve more quickly?
So I want to ask you about Octaura, because I think the listeners are going to quickly understand how this opportunity easily, I think, got on your radar, and you better than many would be able to understand the opportunity. Tell us about Octaura. Tell us about this company that you mentioned you were already an investor and you were familiar with them. Tell us about it. What sets them apart?
So Octaura is an electronic trading platform and data company. And you're familiar, Jack, with, equities trading exchanges. So NASDAQ. So this Octaura is really focusing in the fixed income product, and within fixed income in credit, and especially loans and collateralized loan obligations. So CLOs. So until now, the loan market, it has been incredibly manual. So you've got traders very much trading manually through spreadsheets and phone calls and emails. And Octaura is transforming how that is done by using technology to innovate, to create better trading protocols so that investors and traders can have much more transparency and can do the trades and execute trades in a much faster fashion than they used to do. And what really sets Octaura apart is, number one, the talent, the market knowledge that the management team brings to the table. Number two is the technology that we have built to help make this antiquated way of trading, how to evolve that with technology. And the number three is having the ecosystem around the table as investors. So as I mentioned, we have banks around the table as investors, as well as the buy side. So these are sort of the market makers and the market takers. And we have those institutions who are now invested in this platform and who really have the skin in the game because they want to see the transformation of this market. And to me, so it's really that. It's having the market expertise, the technology, and the ecosystem, all looking to achieve the same goals.
The way I was looking at it, and you can correct me, Octaura is not trying to be a bank, but it does modernize parts of the loan and the CLO markets that banks have historically certainly played in. How do you think about this balance between being a disruptor as well as a collaborator? And that's what I see this company as. Would you see it differently, or?
No, that's absolutely right, Jack. But I think that the key difference is that you are disrupting in collaboration with the current market players and the incumbents, really. And so to do that in partnership with the players in the market who also want to see this change, but want to do it in partnership with Octaura, I think that's the key to being able to disrupt in a way that we understand what it is that the market wants and what it is that it needs. And so it's really, how do we do this? How to disrupt in a collaborative manner. And it's been fantastic, Jack. I mean, just if you look at right now, we have in the loan side about 30 dealers that are trading through Octaura. We have about 160 to 165 buy side institutions that are using Octaura. And we recently launched the CLOs as well about 2 months ago. And we already have about 12 dealers on the platform for CLOs and about 60 buy-side firms. So that in itself tells you that Octaura is disrupting in partnership with, if you can say that, with the current market players.
Mm-hmm. Well, I saw that there was a recent, I think, capital raise earlier this year, prior to your arrival. This is a growth stage company, I think, still. And can you share with us? We speak to a lot of finance leaders who join this weight class of company, and we like to understand better how they think of resource allocation at this stage of growth, resource allocation and financial planning. Can you just share some thoughts on your mindset?
Sure, Jack. You're right. We just closed in the summer of this year, shy of $47 million. We had most of our existing investors participating, and we also had a few new investors, both in the bank side as well as the buy side. I think that at this growth stage, the company, even before I joined, and I was on the other side as an investor, the company, the management team, and the board were very clear about what needed to happen in the next few years. And the management team has been working really hard in putting together a 3-year strategy. Something you don't see too much in a lot of companies at this stage, but I think that was really the discipline of being very clear about where we were going, what products we were launching, and where we were spending the money on. I think that obviously the business plan has a lot of different factors that one needs to take into consideration, which is how fast do we go into the market, into a new product, into a new geography. But there's also that discipline of trying to balance that out and understanding the risk and being able to control that. So the way that we are thinking about resource allocation, to a certain extent, we have a plan that we want to follow, that the board, we're in discussions right now with the board, and that the management team has been putting together. But at the same time, I think with me coming in, Jack, what I want to really work closely with the CEO and the team is to create certain frameworks that will help us really figure out things like future buy, partner versus build decisions. Where do we go next? Expansion, geographic and product expansion. There's something that is on paper, but that in general, we have a good idea of what we want to do. But how do we implement that very quickly in trying to make decisions? What is that framework that we need to go through in order to figure out what is the best resource allocation at that time? Because business plans might change. We might have to pivot. The market might want something different from what we had expected just a year ago. And so to have that flexibility, but also some discipline around what the original plan is and how we might want to, how we execute on that, I think is going to be important.
Interesting. you arrived again. You've had 4 weeks here. We always use the word visibility. Do you have the visibility into the business you want? Are the metrics you are watching most closely to familiarize yourself with the business, are they all available to you? I don't think you're going to say no, but what we'd like to know is, are you looking to raise the profile of certain metrics or change the conversation? And as you described, those frameworks that you're looking to develop for the allocation decision making, clearly metrics always play a role in those types of frameworks and decisions. Can you share with us, is there a metric or a measurement that you think needs to be top of mind as you move forward?
Jack, I think that the company has done a good job in having metrics, very obvious ones, obviously, with regards to revenue, market share, client engagement, etc. And these are metrics that obviously the team uses internally to gauge how we are doing, but also that the investors and the board wants to see. I think that for me is really thinking about how can I make that more granular? Because I think that it's more important. I think that a lot of the times companies at this stage, sort of in the younger stages, from what I have seen, have been very busy reporting metrics to the investor base, to the board, to others. And I think that a lot of the times companies end up using those same metrics also for internal purposes. And for me is, how much more granular can we get so that we as a team are so much more clear about where we are on a daily basis, on a weekly basis, on a monthly basis. We only need to report these metrics to our investor base, to the board, or externally, maybe on a monthly, quarterly basis. And so I'm trying to figure out how do we know on a week-to-week basis whether we are on track or not just by dividing it by the number of weeks that we have left, but truly trying to create a much more granular plan in terms of understanding our metrics.
Is that achieved via technology? Is that achieved via more conversations and having people understand why this data has to be shared more widely, more regularly?
I think it's both, Jack. I think that the intent might always be there, but it's how do you actually get these numbers and how do you actually get them very efficiently and correctly and accurately, right? And so it's something that we're building internally. Already we're building certain tools that will help us distill a lot of the numbers and the data so that we can figure out what it is that we have, what more do we need to track, and how do we use those numbers, right? I think data is only as valuable as what you do with it. And there's two parts to it. How do you get the right data? And that's definitely technology. And then how do you use it? Which is much more about sitting down with the management team and really figuring out together what makes sense to track and how and by who.
So we want to ask you about AI. As you step into this CFO role, how are you evaluating Octaura's current use of AI and data-driven automation? Are you impressed? Are you already knew a great deal, I would imagine, but
It's interesting you asked, Jack. I wasn't aware because it's still being in development. So I wasn't sure where it was. It's still in the developmental stages, but, I have to say that I'm pleasantly surprised because, Octaura is really, spending, time and effort and resources in building this tool internally. I think that what's interesting here is that we are also a data company, Jack. And so we have spent the last few years not just developing the trading platform and the protocols and the technology, but also developing data products that will help the clients make better decisions, that will help clients have all of the information right in front of them so that they can make better trades. And so that was something that we were relentlessly doing. And that was very important for us to do because that is the product that we are providing out there. And so I think that now the team is really spending a little bit more time and thinking, okay, how can we now we're providing all this data to our clients, and that's going to be a big part of what we do. But how can we internally now start using some of this data to make better sense of what's happening, to help us forecast better, to help us anticipate things that are going to come based on historical data, and also to help us make the right decisions in terms of resource allocation, in terms of expansion, in terms of what the clients might be needing more of that we're not offering. And so I think that it's something that I was quite pleasantly surprised. I'm going to be incredibly involved in sort of how we think about this, and very proud to say that we're in a good start.
At a company at this stage of its evolution, one would think that a big part of your role, or the types of decisions you're going to be involved with, build versus buy. Do you, and I'm being very general here, but is that, do you expect to be participating in a lot of those types of discussions?
Oh, it's going to be, yes, absolutely, Jack. It's something that already, even before coming in to this seat, something that the CEO and I really thought about. How do we become more disciplined about how we make these decisions? How do we become more methodical? Because as the company grows, more opportunities are coming our way every day. So at the beginning, right, and I think that you're very familiar with this, but as the company is growing, you're really just focusing on delivering the product that you promised you were going to deliver. Now you're a couple of years into it. You're doing very well. You're accelerating. You're growing very fast. So things are coming your way. Hey, somebody wants to meet with us because maybe there's a potential partnership opportunity. Hey, somebody might be interested in doing more business with us from a partnership, acquisition, buy perspective. And the more we start seeing that, we realize that we really need to we need to be prepared to make those decisions in a methodical and in an efficient way without getting too bogged down with each opportunity. And so that's something that I really credit our CEO for having thought about it a lot, and for really asking me from the first moment that we met. That's something that that he would like me to be part of. And so it's going to be absolutely a key part of what I do.
When it comes to AI-enabled capabilities within the finance function, forecasting, workflow automation, risk modeling, what do you think is the most promising? What do you to leverage as you go forward?
I think forecasting is going to be very important for us, and I think it's going to be incredibly helpful for me. I think that for the finance function also, just in helping us, I think going back to your question, how do you think about capital allocations, resource allocation? I think going back and being able to use some historical data on what we had aimed to achieve by, for example, launching certain products. What was it that we really wanted to achieve? What was it that we really got out of it? And not just at the top sort of high level numbers. That's something that we already have today, but really getting much more deeper in terms of client engagement, in terms of what really happened after we launched a product, and how can we use that for future expansion and growth. I think that's going to be also absolutely very, very key for us.
Given your background, your experience in what many would see as a highly regulated global banking environment, how are you likely to approach governance, controls, and responsible, back to AI, responsible AI adoption in a fast-moving, adoption environment?
We have actually an AI group that has council that has been set up internally. So that has been top of mind. It's very important. We are also regulated because of the CLO trading. And obviously all of our investors are regulated institutions. And so it's something that has been very important for us from the beginning, something that we take very seriously. We're still, as I said, sort of in the early stages of the development of the AI product internally and the tool. And so, that's something that we're going to have to be very mindful of, but we take it very seriously.
Cristina, we always like to ask our guests for a finance strategic moment. Now, this might have happened any time during the course of your career, but it's just a moment of insight that perhaps you've experienced along the way. We leave it to you to sort out for us, but what comes to mind when we ask for a finance strategic moment?
Jack, I'm glad you asked that question. As I mentioned, I think I've, been here for less than a month right now. And I think it was the second week that I was here. I went into a meeting. It was the leadership team, and we were talking about the 3-year strategy that we are in discussions with the board. And I see up there the screen and all the numbers and where we're going in 3 years. And I'm very familiar with what the numbers have been. I was familiar with the sort of 2026 numbers. And so I look at that and I'm thinking, wait a minute, that's so aggressive. But how are you guys going to get there? But you know how difficult it is to monetize this kind of product. And you're saying that you're going to grow how much? But wait, you guys so I found myself not shy to ask these questions, but really just kind of questioning how are we thinking about that? What can go wrong? Because that's really a muscle memory of 20 years of being an investor where you look at numbers and you need to figure out what can break, what might not the company achieve. And therefore, as an investor, how do I stress test that? So that I found myself doing that. And thank goodness everybody was so nice to me and they were sort of trying to answer the questions and how they had gotten to those numbers. This is my team, the management team, my peers, and I'm here sort of questioning this. And then all of a sudden on my own, something hit me. It was this aha moment. And it was, Cristina, what am I doing? What are you doing? You're the CFO. You're part of the team. You don't have to challenge on what might go wrong right away. That's very important. But if anything, you need to help the team figure out how they're going to get there, how they're going to achieve the numbers. It was some might say a very slight shift, but for me, it was this physical sort of change in how I was looking at all of this data, all of these numbers that were right up there in front of me. And that's when I realized, Jack, I am no longer sitting outside scoring the story of Octaura. I am inside helping build this company, helping build the story and to write the story from the inside. And so that, I think, was a very pivotal moment for me, which from that day on, it's still not automatic, but I try to really think about that. It's really, again, balancing the discipline, the control, but not shying away from ambitious milestones and goals. That's what we're here to do. And it is my job to help the team get there together.
As you began to evaluate CFO roles, what is it now that you realize you might have done a little differently or maybe thought about it sooner?
It's two things. One, I sort of mentioned a little bit about myself, and I wish somebody had told me this, is that there is no linear path to becoming a CFO. So I would really encourage others to put more emphasis on the breadth of their experience rather than trying to go through the typical route, because not everybody has that. And so really emphasize all the different experiences that you have, and not focus so much on this linear growth. To me, it's that learning path rather than the linear path. And then number two, you're never going to have all the right answers. Nobody expects you to come in with all the answers. What you're expected to do as a CFO is to ask the right questions, to be strategically minded, to be able to see around the corners, to be able to balance risk and growth, and to really provide to be thoughtful. I think that that's really important. It's not just what you do, but it's really how you think and what you're bringing to the table for the rest of the team to be able to work together with. So I think that those are probably the two things that I would encourage others who are looking into the CFO role to think about.
We talked a little bit earlier about your tenure at JPMorgan. It's long, and it speaks to the fact that you enjoyed, it was a satisfying, we would imagine, career for many years. But again, it comes, why didn't you leave sooner? And there were opportunities, but you always stayed. So there was something more to stick your teeth into, perhaps there. The opportunities came. Or not, Cristina. Maybe there was a time you were close to leaving. Maybe it happened in the first 5 years. Maybe someone finally mentored you, or someone stepped in and said, wait a minute, there's an opportunity. Just stay here a little while longer. We'll find it. I don't know, but can you share with us, was the course always so straightforward as it appears on on your resume?
In a way it was, Jack, but what you don't see on my resume, or what's not so obvious, is that I moved around within JPMorgan a lot. And that's really something that I give credit to the bank for allowing me to explore, even within the same seat, but from various angles. So I started in investment banking for JPMorgan in Hong Kong. So I did that for about 3 years. Then I moved on to the strategic investments role in London with JPMorgan. So I was there for 3 years as well. And that's really when we started seeing a lot of the electronification, a lot of the strategic investments part. And so that was quite a great time for me in my career, where I learned a lot. And then after about 3 years, I came back to the U.S. And by then, actually, the strategic investments team's mandate had broadened outside of just markets and corporate investment bank to include asset management and consumer bank. So in a way, Jack, I like to say that from the outside, it seems like I've been doing just one thing for 20 plus years, but actually the different geographies, the different teams that I was part of, and more importantly, the different portfolio companies that I was working with, or the different companies that I was investing in, each one of them just provided so much of a learning experience, learning growth, that I sort of feel like I didn't have too many times in my career where I was thinking, I need to do something else. I need to go and try something new. They kept me busy. I kept myself busy. And I think that that's also something that I would really encourage a lot of people to do, is sometimes you can find growth and breadth by creating it within the environment that you are. And so always explore that, because there's so much goodwill that you create in a big institution. And, to the extent that you can really leverage that and move around and try different things, it's quite important. Until finally, I think, it was really time for me to step away from the bank and try something different.
It sounds like, as you described it, that you were very proactive, though, in perhaps finding the next opportunity. And I don't know if you did you raise your hand? Did you just identify an area and express interest in, future opportunities if they open. Help us understand how because this can, for some, be, sometimes it's awkward. They don't know how to have doors swing open. And why don't they swing open more?
Yeah.
What do you know? What is it that you think you are adept at as you look to build these new relationships and discover new opportunities within a single corporate environment? As you described it, different geographies, strategic investments, electronics. You became identified maybe as someone willing to take big leaps, though. Don't know.
I would love to say that it was all me, Jack, but I think it's a combination. I think that at the end of the day, this is what a lot of my mentors also have told me. You need to take care of the destiny of your career. You need to take control of your career development. But at the same time, I feel like JPMorgan had the ability it's such a big institution that it wasn't too difficult for me to be open about my own aspirations and what I wanted to do. And I think that if you have a great manager, they will always listen to that and really help you, in fact, find those areas. And for me, I was able to stay within one team, but across so many different geographies and doing different things within that team. And so I think it's both. I think that you need to raise your hand when you see an opportunity or when you know what it is that you want to pursue. But you also probably, it would be good for you to be surrounded by folks within your own career, where they can really also help you figure those things out and help you find those opportunities.
Yeah. Well, thank you for that. We always like to ask we always like to ask our guests to reflect a little on the personal side for us. Well, you've only been there 4 weeks, so your colleagues know next to hardly anything about you, Cristina. What is it that most people don't know about you? Something from your past, an interest that you have, some surprise chapter from your professional life? Don't know.
Well, from a personal side, I don't think too many people know here yet that I was born and raised in Paraguay. So my parents, Korean descent, and immigrated to South America back in the 70s, and I was born there. And so I spent about 15 years in Asunción, speaking Spanish. and really growing up there. And I think that many times it comes as a surprise to people when they find that out. Then they say, wait, I think I hear a little bit of a Spanish accent, but no one is able to put those two things together.
Wow. Would not have guessed. That's a great share. Thank you. What about, wonder along the way whether your business mindset was influenced by any type of book or resource or thought leadership along the way, anything that you feel you grasped and meant something unique to you in some way?
So that's interesting you asked, Jack. While I was in discussions to coming to this role, actually, so quite recent, earlier this year, there was a book that I picked up. It's called Stratospheric CEOs by George Dickens. And the reason why I picked that up is because it features several CEOs who built their businesses within areas where the market was really at an inflection point. So very similar to where Octaura is. And a lot of the companies, actually, those CEOs, built companies where, from my JPMorgan seat, we had either made direct investments or were working closely with. And so as I was making this big change going from JPMorgan to Octaura, I really wanted to see what it is that, they were talking about. And what I loved about it is that they really talked a lot about that balance of trying to grow fast while also maintaining the control. They really honed in on not just having the vision, but being relentlessly executing on it, which really resonates with what it is that we're trying to do here at Octaura. And then really how the CEOs were talking about the culture, about people. It was really how important it is to ensure that everybody around, that everybody in the company really is following the same vision and has the same, intensity in terms of trying to get there and how to build that type of culture. And to me, that all really resonated. And I wanted to see how the CEOs have gone off, started companies just like Octaura and built them to be billion-dollar companies. And so that really resonated to me. And what was really great about how the author Georgie really tried to present that book was not just the successes that the CEOs had, but all the setbacks and really the difficult times and how they really overcame that. And to me, that was really important to read, to absorb, and to really prepare me for this next chapter of my career.
Yep. Great overview for us. Nice new selection for us. Haven't had it before, so perfect. Thank you. We are up to our final question, Cristina. We're going to ask you to look forward, and we'd like to know what you see as your priorities for the coming year as CFO of Octaura. What would those be?
I think that the way that I'm bucketing these priorities for are I really want to evolve and advance our finance function, like I said, from the technology perspective, from the AI perspective. So that's going to be a big thing for me. I want to really think about the investor relations part. I think a lot of the companies at this stage maybe wait too long to start thinking about that, but I really want to implement certain changes or start that investor relations part with investor base, both current and potential future investors. And then on the strategic side, really work together with the team to ensure that we achieve that 3-year strategy that we're finalizing right now and create the processes and the frameworks around that. I think, Jack, there's a lot that I can bring from my experience from JPMorgan, sort of in terms of how to think about the governance, how to think about these processes, how do we help how to help the company grow. But one thing that I also did learn in the past month, Jack, is that I can't just copy and paste what we were doing at JPMorgan. That just wouldn't work here. It's a completely different type of environment. Obviously, we're doing very different things. We are at a very different stage. And so it's really about not just copying and paste something that I've done before, but how do I take the principle of what worked at a large regulated institution and how do I apply that in a fast growing company like Octaura?
Cristina Kim, thank you for joining us on CFO Thought Leader.
Thank you very much, Jack.